Hi everyone, welcome to AFX Pro Trading. I'm Mark Hills. I'm sure you all know me by now. So here we are at the end of 2024, or almost to the end of 2024. So for me, it's signaling the end in one way and the start in a new way. So coming into 2025, I will not be doing the amount of courses that I've done in the past. I'm definitely scaling them back. Cutting my workload back due to some health issues, and I'm not getting any younger, and also the markets dictate we change what we used to do. Now this is a big one. So for any of you guys that have been watching what I've done over the last 18 months, 2 years, I've ventured down the road of EA trading. Now for a lot of you, this is a dirty word. Probably 90% of people that have tried EA trading have bought crap that just works for 2 months and then it disappears and never works again. The simple reason is it is all run with RSIs, MACDs, all the standard crap that's put out there. And look, the liquidity providers know this. They can alter the structure of a way a market trades just by a couple of inputs in the algorithms. And I've come to realize that by what we can do with our algorithms just by tweaking a couple of inputs. So basically, coming into 2025, I'll be managing more my EA clients that are on the full batch load and moving forward from there. So I started FX in 2005, and probably the pinnacle was around 2011 when I turned 100k into 300k in 3 months. Now, in the markets that we are presented in this day and age, it is basically impossible to ever replicate that. From that point in time, manual trading has become a little bit more difficult and a little bit more difficult year after year after year. Coming right through to the back half of the year that we've just seen now. So here's a given or a takeaway that I have never ever heard any other educator or even any trader that ever talks about. Now to me, if no one says that or no educator tells you this, they are full of BS, because this is what you have to do in the markets that we have. You have one trading strategy from January through to May. You have a second strategy from July through to December. You cannot, and I'm telling you, you cannot use the same strategy with the same guidelines and the same rules 12 months a year. It doesn't work. That's if you want to make money. If you want to lose money in the back half of the year, which is why 90% of the traders do. Over the years, do you know when my biggest inquiry for courses were? About October, November, when everyone had lost everything that they made in the start of the year. That's the reason why. Right? The year is split up into 2 sections. The back half of the year, you need to run wider stops, different targets, right? Because it changes its personality. Then you must, and I'm saying this again, you must be ready to start trading the first day of the new trading year. Why? Because people are lazy. The liquidity providers know that. So what they do is the moves that they're going to push, they want to get them through in the first 2 days so there's no one on board, and everyone looks at that and says, oh, gee whiz, look at the movement this year. Oh, we might give it another couple of weeks and start trading. Well, guess what happens? You've just been screwed over by the liquidity providers again. They've already done the moves And now they're sitting there with a smirk from ear to ear, waiting for all you people that were too lazy to start on the 1st of January. It's all over Red Rover. And then February will be slack, and then we kick off again. Guys, that's the dynamics of what the FX markets do, right? Unless you get in tune with that, I wish you the very best of luck, because you've got a really hard road to toe. It's like starting with the EA batch load. If you start in August, well, you're better off not starting. You're better off waiting, right? Wait till the end of the year. The results that I do are for a full 12 months. We're not going to pick out a little 2-week period or a 3-week period here or there and say, whoa, look at that there. It is about what happens over a full 12-month period. So basically what we do is this. We run 6 codes at the start of the year. We throw them off at the end of May or end of June. Some of them run through to June. And then we put the back half of the codes on, and they run through until the 2nd week of December. So basically we're looking at 12 EA codes, and then I have 12 indicator codes that you can use for your back testing and looking back. And this is what we're going to come through now. So what we're going to do now is come through and have a look at the overall results from July through to basically the end of the trading year now. And then what we're going to have a look at is the results that the start of the year right through to this year, and what we've got coming into next year. And you can see the difference of what goes on. All right, guys, so let's come through and have a look at that, and then we'll wind it up. Okay, so let's come and have a look through these codes. These are from July to the end of the year. Now, these results here are based on, and I'll just open it up and show you what the stats are. We're looking at a $10,000 account at risk per trade of 1%. So pretty much what I'm doing when I'm trading, I'm cutting that back to 0.5%. So basically the overall result we're looking at here is going to be half of that, doing 0.5%. The only pair that I trade double of what we're using is the Euro USD because of its high win rate. So it's set at 2%. So these are 1 and the others are 2. So just bear that in mind. Look, you can run it at this if you really want to, but you're going to end up in drawdown somewhere of probably about 20% if you run at 1% risk. So you need to be aware of that. So basically, we're trying to halt our drawdowns to around about 10%, which is very acceptable. If you try and get better than that, you don't make any money for the year. That seems to be the happy medium. So that's what I've done. That's what these codes are all on. And I've set them to go back to 2021. So that's the Euro Yen, it's a 10-minute, that's what it's done, 76% win rate over the years. Come through to the Euro USD and it's increased. The win rate here, that was actually sitting on 98% until a couple of weeks ago. So it's just dropped back a little bit here now. And now we're in here, we've got one trade. My goodness, if we can't see behind there. Anyway, this one here is still live at present, stop losses up there and so on. Pound yen, over the years, it's tapered off just a little bit here in November this year, but still a very good result percentage-wise over there. July was still a little bit iffy. You could almost take July out, but for the sake of the exercise, it stays in there. US dollar yen for the 6 months period. Again, it's up on 80%, 85, 74, which means you can see your dollar value comes back a little bit there. Simple as that. US 500, up on 80%. It still remains there. This year, we've not managed to get 1 month here back in August, there was a bit of a run. Normally, somewhere in there, we're going to get a month where you're going to get 100% return on your account. So, basically, this 2024 is the very worst back half of the year that I've ever seen. So we're sort of looking at next year for the volatility to come back into it as it does in the first half. And hopefully the back half of the next year, we had all the elections in the US and all the corruption coming out from the Democrats coming to light of just what the world's been held to ransom to. So, things are going to change next year. We're going to see a different currency market. So we should get something like that pop in and there. Come down to the next one we got here is gold. And again, we normally get a very big month somewhere in here. 21 wasn't so brilliant, it was actually a loss year. So, you can still, and I've had it, it's in there, that's what it does. Overall though, we're looking at the whole batch load. So this is why you have the full batch load on. So, you've seen those figures. We'll come back through here. We've got, this year was 3,882, 5,300. So we got about 8.5, 9.5, 10, 10.5, 12.5, and about 15. So that's about 7,500, which is at 0.5% risk on a $10,000 account. So there's still a 50% return coming right through from July to now. So that, I defy any trader to make that amount of money manual trading in the back half of the year, going through all the crap that we are subjected to. Okay, so now let's step forward and have a look at the start of the year codes and what they have done in this 12 months and what we've got to look forward to coming into next year. Okay, so now we come to the start of the year codes. And the first thing you'll notice is the percentage win rate is a little bit less, but the dollar value that we get out of it significantly increases. So this is Euro-Yen 4 minute. Quite a good trade. Runs right through until July. There. Again, this is, all of these are all at 1% risk. Trading this, we're going to run that risk at around about 0.4%. And that should still hold us at around about a 10, maybe at worst a 12% drawdown, somewhere in there, and then we get our fluctuations up from there on. So that's that one there, Euro-Yen. Then we go to a wider 10 minute, again around that 60 to 70%, still 11,500, 17, quite good. Pound yen. And this is a 10 minute, and we've just got the December one we've just flicked on here. It works quite good. You can see what it's doing here in September as well. But the start of the year, that's very consistent right through all those months. Coming through there, you just, very hard to beat that. Then we go up to a 30 minute. So one tends to complement the other. You go up to a 30 minute, and then we're starting to get up into more serious money here over the years sort of thing is what we're doing. So, these codes here, basically from about April on, they run and haven't really had anything done to them since then. So they're moving forward. US dollar yen, not quite as much money in a couple of months here, but you just never know when it's going to do its thing. It's definitely worth being in the mix. US 500, yeah, still it's 70% win rate, so that means the dollar value comes down just a little bit. Gold, there's basically March seems to be the month for gold. So this one here, probably when I get to the stage of running them, I'll shut off everything and just leave it run in March and May, because they are the two prime months. I don't need to run the risk of other months or whatever. So that's just a little bonus on top. That gives you 7 codes to start the year. So that, guys, it shows you what we're doing, what we're achieving, and what can be done. Right? It is definitely the way forward as far as trading goes. You know, if you like hard work and want to make money the hard way, well then stick to a 9-to-5 job, or do manual trading where you've got to still sit and watch the charts. Even though I've taken it to as automated as we can get it, you still have to make decisions on the fly. Right? As soon as you have to make decisions on the fly, I'm yet to find many traders that are still going to make the exact same decision as what I make. And maybe that's a reflection on what I teach, but all I look at is what's in front of me. It's pretty much X plus Y equals Z, but people still have their own way of looking at things and still will interpret something different. That's what happens. So, given the fact that at the end of the year I'm starting to take it easy, what I'm doing is some very significant discounts on the EA and these codes until Christmas time, which we've only got another 2 or 3 weeks away. Then the codes are not going to be sold as individuals. They are going to be a full batch load, and I'm going to be looking at somewhere around about 30k for a full batch load, which is 6 and 6 and then another 6 of the indicators, which is the indicator code of what I've got here. So that's the amount of where we're at. In the meantime, I'm happy to give everyone a foot in the door. If you want to purchase just one EA and see how it goes on one pair, then come and talk to me and I will look after you. So I'm probably going to do this, is buy one and get a second one free. So if you buy one, what I will do is give you either, supposing you buy the July, December or whatever one, I will give you its mate for the second half of the year. You'll get that free. Now, I am telling you right now, I don't need the workload. I don't want thousands of customers coming into next year. All I want to do is help the people that that watch my videos. You know, all my clients, I've sent circulars out to them. They know what's on there. A lot of you guys have come on board. I know a lot of you guys are still so skeptical on EAs and that because of all the shonks. I can't help that, right? That's your mindset. You need to do something different. Purchase one EA and take it and try it. It's not buying the full batch load. Do whatever you like to do. But if you want to do that, please make contact before Christmas time and I'll look after you. After that, basically, the honeymoon period is over for what I've done. This, to me, is the culmination of 20 years of trading. So 20 years of knowledge and trading has gone into these EAs. As I said, it's not like all the shit and the shonks out there that, oh, we run a moving average and an RSI and, oh, look, that did that for 3 months and, oh, we'll put that out there and we'll charge everyone $900 and we'll sell 5,000 of them. We're going to make a fortune. That is not what I'm about, not where I come from, and why I've got to where I am today. Thank you guys. If I don't hear from any of you, that's fine. Have a Merry Christmas and a safe New Year, and let's see what the next year brings. If I can help you in any way, contact me by the details coming on the screen right now.